Good morning. Welcome to Trading Hour. We're coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Rima. With me is Vivek Iyer, and it's a good start to the trading week. The morning's been good. The Nifty is holding up with a gain of about 100 points and now just conquered the 22,500 mark, up 0.5%. Mid-caps are outperforming. We've got a positive advanced decline ratio. IT, though, continues to drag. It lost nearly 4.5% over the last couple of, last week. And today as well, the Nifty IT index, despite the bounce that you can see in the last 30 minutes, is under pressure on the back of, growth concerns. And I was just reading this article. Now, even BMW is now talking about lower profit margins because of the tariff, the impact of the tariff. So that could hurt companies like KPIT Tech. We'll talk about LTI Mindtree because negative news is coming out of, potentially negative news out of Citigroup. So IT has been a bit on the back foot. FMCG, names like Britannia, Nestle, Asian Paints, Tata Consumer in the red right now. And Reliance Industries started off strong, but now has dipped into the red.
Has dipped into the red. Good morning, Rima. Absolutely right. Coming off a longer weekend. But the good part is, we're seeing green across all of the top indices. And like you mentioned, advanced decline ratio quite strong. Well, a couple of stocks. The first one has to be Bombay Stock Exchange, BSE, initiating coverage report. That stock is up almost 2%. But along with that, another exchange stock, that is MCX, that particular stock has bounced quite sharply today and has recovered quite a bit from the recent lows that particular name stock, almost 4.5% higher. The other stock on the radar is CAMS. Again, remember this particular stock too is now part of the F&O segment. The company has signed an agreement with LIC for providing insurance services, and on the back of that, that stock cooled off a little bit, but again, over 2% higher. Some order inflow cheer, and KEC looks likely to go ahead and meet its FY25 order inflow guidance of close to 25,000 crore. So that particular stock in the broader end is doing quite well, almost 6% higher. And one set of stocks that have seen significant selling pressure, and remember, uncertainty continues around the entire pharma space. But pharma stocks today, most of them, especially the generic names, are the ones that have bounced back quite sharply. Names like Reddy, Ajanta Pharma, Granules, Glenmark, all of them doing quite well. The pharma index is up 1.6% today.
Indeed, pharma is the top sectoral gainer. But let's talk about, the lock-in of 7 companies is ending today. And you're seeing the biggest impact in a stock like IKS, which is owned by Rakesh Jhunjhunwala, and it's fallen close to about 10% at one point of time. Hormis has now compiled, the list of stocks where the lock-in is coming to an end today and where there could be some supply pressure emanating. Hormis.
Significant reaction seen in most of these shares. As you mentioned, IKS, now it's down to the lowest post-listing level. Still above its IPO price though, but still way below its peak. And that also has seen as many as 42 lakh shares, or 2% of the outstanding equity, freeing up for trade today as the 3-month lock-in period is ended. Mind you, a lock-in period ending does not mean all of these shares will get sold in the market. They only become eligible to be traded. Now, on an overall basis, it's almost 20 crore shares, 7 companies, including IKS Health, but the lion's share of that is garnered by Vishal Megamart, with 15 crore shares that free up for trade. That is almost around 3% of the company's outstanding equity as well. That is one of those few names that are still trading above their IPO price when it comes to their recent listings. MobiKwik is the other one that is seen, also saw a very sharp reaction in the early part of the trading session, still trading lower by around 7 to 8%, 46 lakh shares, 6% outstanding, well below now its IPO price, and even below its almost 65% below its post-listing high. And Ajax Engineering is another one, 30 lakh shares, 3% outstanding. That stock too is below its IPO price. And Sai Life Sciences is the other one, trading with some bit of pressure in today's session, 83 lakh shares, or 4% of the outstanding equity, also freeing up for trade in today's trading session after the end of the lock-in period. EMS is the other one, almost 1.1 crore shares, 20% of the outstanding, and despite a 40% correction from its peak, the stock is still up almost 180% from its IPO price. And lastly, Ratnavir Precision, another 20% outstanding, freeing up for trade, 98 lakh shares, and that stock too is in focus today. So significant pressure seen in some of these names after the end of their lock-in periods.
Thank you so much for that, Hormaz. Rima, the entire IT pack today is under significant pressure. The IT index, the top laggard, mid-cap IT stocks taking it more on the chin. I believe there's some negative news flow around LTI Mindtree as well. What are you picking up?
So basically, there was a report in Times of India where they're talking about the US banking giant Citigroup, where they're planning to reduce their dependence on external IT contractors. Now, a large company like Citigroup would do their bank IT work in-house. You would have a dedicated in-house team. You may have a GCC, which is, only like a captive center, or you may use external vendors. You could have, internal work which is done by subcontractors because you don't want them to be on your payroll, right? So the article right now says that you are planning to reduce your dependence on external contractors from 50%, bring it down to 20%, and in its stead, increase the strength of the internal tech team. So they're planning to hire more employees for their tech work internally. So bring it up from 48,000 to 58,000 by the end of the year. Now, the street is a bit worried because LTIMindtree is a key vendor for Citigroup. According to some analysts, it should be amongst the top 2 clients. Even the other companies like a TCS, Wipro also do work for Citigroup considering the large size. Now here the only question is whether they're planning to reduce their dependence on external vendors or subcontractors. Right? If it's subcontractors, it's not likely to be meaningful because subcontractors you hire depending on the kind of work that you need. They're not on your payroll. But if you're reducing it on external vendors like IT services companies across, it could be a negative impact. And also the other way is, the article also says that they're planning to increase the internal tech team by 2,000 employees. 48,000 becomes 50,000. So it's not that meaningful an increase in strengthening the IT team. But nevertheless, there is a negative sentiment because anyway IT companies are faltering on the back of growth concerns with US slowdown, etc. So, we're going to watch for the developments. As of now, this is what reports are saying.
Thank you so much for that, Rima. So, worry is given the fact that this could be one of the top 2 or clients, like you mentioned. Well, moving on, one stock that's seen quite a bit of a recovery today is IndusInd Bank. It's in focus after RBI has eased concerns on the bank and released a statement that the bank is well capitalized and financially stable. Sudarshan is here with more details.
So, if you remember, last week, IndusInd Bank had announced that due to certain accounting mismatch, its net worth was going to be impacted by around 2.35%. After that, there were several reports. And following those reports, RBI on 15th has come out with a statement emphatically mentioning that bank remains well capitalized and financials of the bank remains satisfactory or say healthy. It has also mentioned few ratios to back the statement mentioned by RBI. It says that capital adequacy ratio is at 16.46% and provisioning coverage ratio at 70.20% as of Q3 FY25. Another ratio, that is liquidity coverage, was at 113% versus regulatory norm requirement of 100%. So on this also, it remains much above the regulatory norm. And it says that company has engaged external audit team to comprehensively review current systems, and RBI has asked board and the management to have remedial action completed this quarter, that is of Q4 FY25. And due to this RBI statement, you are saying that IndusInd Bank is up around 3 or more than that in today's trade.
Thank you so much for that, Sudarshan. Along with IndusInd Bank, ICICI as well as Axis Bank now trading near the day's highest points. But Sudarshan, stay on. SpiceJet is also in focus. There was a large block deal that was reported from promoter Ajay Singh. What is the news over there?
So on Friday, we saw that SpiceJet's promoter, one of the promoters, that is CMD Ajay Singh, has sold nearly 1% stake via block deals for around rupees 52 crore and at the price of rupees 45.30 per share. Now today there is another statement by SpiceJet. It's saying that promoter is going to infuse around rupees 300 crore, exactly rupees 294 crore in the company. How will that infusion take place? First, there are two promoters, Spice Health and Ajay Singh. So Spice Health has warrants of 13.14 crore. Now those warrants will be converted into equity shares. Now for certain part of that, there has to be payment has to be made. Now that payment will be made by Ajay Singh selling around 3.14 crore shares going forward. Now once that allotment is completed, promoter stake will increase from 29.11% to 33.4%. Now, if you in the recent past, if you see the stock move, in 2025, stock has been underperforming, and so far it has been down around 18 to 20%. Now, also if you look at the aviation data in February, also its market share held steady. It was around 3.2%, but if you look at YOY, it was down more than or around almost 250 basis points. So it has has been underperforming Indigo on both aviation data as well as on the stock performance. But as far as the announcements are concerned, it's positive because promoter is going to infuse money in the company.
Thank you very much for that, Sudarshan. We will slip into a very short break. We'll come back and talk commodities on the other side with Manisha Gupta.
Welcome back to Trading Hour. Well, let's focus to the commodity space. Manisha joins in, and today we're focusing on copper.
And we're doing that because the copper prices are trading very close to its 9-month highs. We did see prices go almost to $4.8 and $4.9 a pound. That was on Friday. We had a long weekend, but clearly the international markets were moving quite a bit. We still seem to be holding around those highs therein. The things to watch is one, that the US President Trump perhaps is signing an executive order to initiate review of copper imports and tariffs therein. Remember, we already have tariffs on imports of aluminum and steel, and copper perhaps could be a third metal there. There already is a research happening there. The other thing really is about the US dollar index, which is trading at a 5-month lows, supporting many of these dollar-denominated commodities. The third most important point comes in from China, where on Sunday we saw stimulus measures being announced to ensure that the rural and the urban demand is supported. While, of course, the details of some of them are out, but the third point that was said above from China was that there would be steps taken to also ensure to support the stock markets. The details or the clarity therein is still something that we are awaiting into the markets. But apart from that, it also has to do with slightly better data that we've seen come in from European Union, which also seems to be supporting many of these metal prices, including copper, tin, lead and zinc as well. If you look at the prices for copper, though, we've seen very strong gains come in here. When you look at on the week gains, 4.5% of a jump up is what we've seen in copper. It's up by 6% in the last 1 month and 22% up in this year until now. Clearly, by far, the best performing commodity or metal within that sector.
Thank you very much, Manisha, for that. Slip into a break on that note. We'll come back and discuss technicals. Soni Patnaik from JM Financial Services joins in with the top trading bets.
I thought, I should leave. I should go back to India. We will figure out what is it that we will do. There was no idea for free will. So I came. Rahul also left at the same time. Then we spent almost a month or two to figure out, okay, now what next? So it always started from the family, then solving some,
the
consumer problems.
The business plan came later. First,
Always.
But how do we ensure that we're in the
That
same?
has always been the priority. What you see in front of the label is very different than what is on the back of the label.
And then very different from what's actually inside the bottle.
Exactly. I guess so far we are in some 2,000 stores. In next 2 years, we can easily target anywhere between 15 to 20,000, right? When you go deeper into any category, you also understand the good, bad, ugly side of it. It's a misconception, to be honest. I think the percentage of spend required for R&D eventually is much lesser that you need for your marketing. Investing in R&D is much better ROI than always doing it in marketing.
Welcome back. Let's track some more stocks. BSE is in focus, and BSE has had a very sharp correction, but UBS today is quite bullish on Bombay Stock Exchange. Hormus is here with details.
You know, after the stock is almost halved, right, from its peak, has BIC 6100 was the peak, almost around 4,000 rupees, and now UBS has gone ahead, initiating coverage, a buy rating, a price target of 53.50, and that implies a potential upside of around 37% from last week's closing price. Now, what they say is that the scaling up of the options turnover is going to be a key driver for BSE going forward, and that the fact that it has diverse revenue streams and it could see better operating margins going forward as well. Now, on the valuation front, UBS is saying that BSE is trading at around 33 times 1 year forward price to earnings, which is around an 11% premium to its historical average. But this valuation multiple is of less relevance considering the fact that BSE has revamped its business model, which makes this valuation multiple premium less relevant going forward. So as of now, positive commentary coming in, not a significant reaction in the stock, but a beaten down name for sure, expecting upside of close to 40% here is UBS.
Thank you so much for that, Harmal, for joining us and telling us what exactly UBS sees as far as the prospects of BSE are concerned. Well, moving on, Soni Patnaik from JM Financial Services joins us for a quick technical check on the market. Thank you so much for joining us, Soni. First up, what are you making of the market at the current level? Nifty nearing the 22,500 mark now.
Hi, good morning, Vivek and Reema. Thank you so much for having me on your show. See, I think Nifty is very much in a sideways trend. You know, the range bound that we can see continuing for the past 3 to 4 days, somewhere between 22,300 to 22,650 on the upside. The next leg of upside for Nifty can only be seen once the upper end of this range is taken out, that is 22,650 odd levels. A significant number of call writers can be seen present between 22,600 to 22,800, marking the dominance over this resistance level. So as long as this range is not taken out, upside would be difficult. And support also is quite getting stronger towards 22,300 to 22,400. Similarly, if we look at Bank Nifty also continues to be in a range between 48,000 to 49,000 on closing basis. And it's quite clear that Bank Nifty can only see the next level of upside once it has crossed the 49,200 level. So above that, it may head towards 50,000. But until then, the sideways trend continues for both the indices with stock and sector-specific action that can be seen for the markets.
And what about individual stocks, Soni?
So Rima, both would be on the buy side today. The first is a buy on Polycab, which has seen a very strong reversal from supports of 5,000 odd levels, seeing a good reversal on daily charts as well. So one can buy in Polycab at current levels, keeping a stop loss of 49.80 and a target towards 5,200, 5,300 can be seen from current levels. The second buy is in Hindustan Aeronautics, HAL, which is also looking quite strong to cross above its 20 DMA hurdle. So one can buy Hindustan Aeronautics at current levels, keeping a stop loss of 33.60 and a positional target towards 3,600 to 3,700 positionally can be seen.
Thank you so much for joining us, Soni, and taking us through both your views on the markets, the index levels, as well as your individual stock picks. Well, let's now take a short break. Up next, we'll discuss market fundamentals with Sunny Agarwal from SBI Securities. Welcome back to Trading Hour. Well, one stock that's doing quite well and the top Nifty gainer is Maruti. Some news flow coming in terms of price hikes that the company is planning to undertake. Sudarshan joins in with more details.
So normally any price hike by companies is taken positively, but if you look at the Maruti stock intraday, the stock has fallen to almost 2% from day's high, and there are reasons to it. First, now talking about the price increase in the last 3 months or say in 2025, it's the third price increase that company has taken. In January, the price was increased by up to 4%. Again, in Feb, it was increased by up to 4%. Now, effective April 1, company has taken another price increase, and that again would be by up to 4%. Now, why the price hike has been taken? Company is saying certain costs have increased in the last few months, and that's one of the reasons that company has been taking price hike. But apart from cost, if you look at the sales data also, on the wholesale front, in February, sales were below estimates, especially because of the sales had taken a sharp knock for the entry-level vehicles. Both Alto and Espresso sales in February were down by more than 30% each. The support came from utility vehicle, for which sales had increased by 6%. Now coming to the retail data, as per Vahan website, for the month of March, that is for the first 2 weeks, for the industry, retail data is for the passenger vehicles is down more than 22%. And for the entire, if you look at the entire auto sales, it's down 15%. And for two-wheelers also, it's down around 14 to 15%. So not only wholesales on the retail front, sales are not looking that great for second consecutive month.
Got that. And what about Tata Motors? HSBC has upgraded the stock, Sudarshan. What's the reason?
So in 2025, it's one of the stocks in the auto pack which has been the biggest underperformer. But now in the last few sessions, today HSBC has come with a positive note. If you look at the last week when CLSA had come out with a note saying that it has the high conviction outperform call on the stock. Now today HSBC has upgraded to buy from hold, but has cut the target to 840 from 930. But still the target price of 840 implies an upside of almost 30% from current levels. And what are the triggers that HSBC is saying for margin expansion? First, that reduction in discounts and warranty costs in JLR. Also, it's expecting a recovery for small commercial vehicles. Another positive, some of the positive triggers can be: first, JLR has maintained Q4 EBIT margin guidance of more than 10%, and as per HSBC, it can be a positive or re-rating for if JLR manages to maintain the guidance in Q4. Also, new launches in domestic PV market should help company to hold on or arrest the market share loss. Now, as far as the valuation is concerned, after the recent underperformance, now valuation looks comfortable or say reasonable. Also for JLR, it's currently trading at 1.8 times FY26 estimated EV to EBITDA, which is at the lower end of historical average. So overall, it's looking positive for Tata Motors after the recent underperformance. That's the reason you are seeing so many positive notes coming out in the last few weeks.
Thank you so much for joining us, Sudarshan, and giving us a sense of the auto sector. Well, moving on, Sunny Agarwal from SBI Security joins us now to discuss market fundamentals and its top sectoral picks. Thanks so much for joining us, Sunny. Sunny, while we are talking about the auto space, first up, your view on that particular space, and secondly, you do like a couple of auto ancillary names. Do you feel that the demand outlook is slightly uncertain now?
Yeah, good afternoon, Vivek, and thanks for having me on the show. I think within auto space, we are more constructive on certain segments like tractor and SUV. So within tractor, again, this segment we would like to ride through auto ancillary, as there is a lot of uncertainty on what will happen on OEM side and which segment is going to do well. A case in point, a stock which we like is Swaraj Engine, which is subsidiary of Mahindra & Mahindra, basically a 3,800 crore market cap company. Recently, they have expanded their diesel engine capacity from 135,000 diesel engines to 195,000 diesel engine, and that capacity came on stream during the first half of this year. And the timing is very right, wherein we are seeing a revival in volumes as far as tractor industry is concerned. So we believe that the company has got a potential to deliver close to 170-180 crore profitability in FY26. Dividend payout ratio is more than 80%, ROE of 35 to 40%. I think trading at a reasonable valuation of 20 times 1 year forward price to earning multiple. So I think again one more play where we find the valuations to be attractive is Lumax Autotech. Again, a small company wherein the market cap is close to 4,500 crore, and our price target here is close to 850 rupees. The investment thesis remains the same, that they are more of an technology agnostic company wherein they make products like head and tail lamp, plastic tank, door panel, and they have recently went on to acquire 2 new companies, which is IAC India and Greenfuel, which will again give them a head start in terms of growth for FY26 and FY27. So our estimate is that for FY26, the company should post profit of close to 295 to 300 crore. And if we value at 20 times 1 year forward price to earning multiple, our price target is 857. Again, Garware High-Tech Film, a kind of proxy play on auto. So basically, they are into this paint protection film as well as sun control film, where majority of the business is from export market. So they have recently, they are on the verge of expanding their paint protection film business. Capacity going to double. And our estimate suggests that for FY27, the company is likely to post a profit of 400 crore against the annual run rate of currently 250 crore. So again, a bottom-up growth story trading at a reasonable valuation.
Lots of auto ancillaries in your pick, Sunny. Hi. I remember in one of the old conversations, you used to like FM Industries. That also makes automotive lighting components for rear view mirrors, etc. Is that still in your preferred stock list?
Rima, as of now, we would like to remain neutral on FEM. The reason being that we are seeing a slowdown in two-wheeler sales volume in the domestic market. And again, FEM is predominantly linked to two-wheeler sales volume. And that's the reason, as of now, we continue to remain neutral on FEM industry.
In the past, you also liked stocks like a Zomato, Polycab, Nuvama Wealth. Now they generated a lot of wealth over the last, 2 years, riding the upcycle. But things have slowed down from, September, October. Stocks have corrected 30-40%. What is the call now on these stocks? Because I remember again from our earlier conversations that you used to like them, but the tide has turned.
Definitely, I think tide has turned for both Zomato as well as Polycab, where we have seen, because of increase in competitive intensity, margins may come under pressure over the period of next 2-3 years. And that's the reason we have seen the correction in stock prices. Also coming to the capital market story again, because of the correction in the stock prices across the board, again, the sentiment has turned unfavorable for capital market stories. But if somebody has got a long-term investment horizon, I think we still continue to remain bullish on capital market as a investment theme, wherein a particular theme like asset management companies like Nippon, HDFC, AMC continue to look good, where we believe that AUM still has the potential to grow at 12 to 15% CAGR over next 5 to 10 years. And coming to the wealth manager like Nuvama, yes, we continue to remain constructive, although in short term, the earnings may get impacted because of the correction in AUM and so on and so forth. But if somebody has got a horizon of 3 to 5 years, I think capital market play continue to remain a good investment theme for next 3 to 5 years.
Got that. Sunny, one particular space, especially last week, that saw quite a bit of selling pressure was actually the cement space. Quite a few of the stocks derated on account of the tax as far as mining is concerned of limestone. You do like JK Lakshmi Cement. In the view of this particular news development, how do you look at that sector, and any other stocks you like other than JK Lakshmi Cement, and what's the rationale for liking JK Lakshmi?
Yeah, so again, basically, if you see the numbers of all the cement companies, you will see that profitability is at kind of 2-year low. For example, for JK Lakshmi Cement, during the December quarter, the EBITDA per ton was close to 450 rupees, and that used to be in the band of 800 to 1,000 2 years back. And September quarter and December quarter has been really a lackluster quarter for the entire cement industry. And with usually, if you see the March quarter is a seasonally strong quarter, so we are expecting a revival in terms of EBITDA per ton. And if I take a 2-year horizon, our estimates are penciling that EBITDA per ton should go up by 200 rupees on a per ton basis for FY26 and FY26, 26 and 27. And if I look at valuation, right now JK Lakshmi has got a capacity of close to 16 million ton. We'll add 4 million ton in next 2 years, and has aspiration to hit 30 million ton by FY30. So on valuation front, trading at $100 to EV per ton. And even on EV to EBITDA, if I take 2-year forward number, trading at less than 10 times EV EBITDA. So I think the company has got a potential to go back to its earlier annual pattern rate of 550 crore which is the currently subdued number. So if somebody has got a long-term horizon, definitely JK Lakshmi is one of the our top pick as far as mid-size cement player is concerned. And another player which we like is Star Cement from this basically a Northeast-based player. Recently, we have seen Ultratech taking 10% stake over there. Again, a relatively better play area where we have seen cement pricing holding on compared to the rest of the India. So Star Cement here, we have got a price target of 250 and with investment horizon of 12 to 18 months.
Thank you very much for that. We didn't get to ask you, your construct on the market, but I'll just put it out there on the viewers. He believes the bulls are retired herd, but they're not out. India's long-term growth story is very much intact. For FY25 to 27, we could still see a double-digit earnings growth. Nifty is trading at 18.5 times below the 10-year average of 20.3. Mid-caps are trading at 24.9, again below the 10-year average of 28.6, and market cap to GDP is now at the 10-year average. So valuations are now relatively in a comfortable zone. We will slip into a break, but as we do that, here is some good news for all our viewers, because India's business news leader is now just a click away. We're introducing the all-new app. Get instant access to breaking news, all our articles, financial world updates at your fingertips. Download the CNBC-TV18 app now from the Apple Store or the Google Play Store, or you could just scan the QR code on your screen. Welcome back. The Nifty is comfortably above 22,500. SBI Life is your top gainer. Bajaj Finserv on the front foot, 3.5%. And the other two stocks with a gain of more than 3% included Dr. Reddy's and IndusInd Bank. Trend, after a rough start to 2025, is rebounding today, 2.7% higher. Generally, private sector banks are up and about. So Axis Bank, ICICI Bank contributing to the bull case today. But let's talk about the microfinance sector, because that continues to struggle and the woes are not likely to end anytime soon or see a difference. Abhishek is here to highlight the pain in the microfinance sector and what's ailing the MFIs.
Well, CNBC-TV18 was the first one to highlight the pain in the microfinance sector owing to over-leveraging of customers. And the situation is unlikely to change in a hurry. In fact, this may well be the longest cycle of pain for the microfinance industry. So what's happened in the past year or 4 quarters? So several lenders have seen a decline in their AUM. AUM for Fusion Microfinance as well as Spandana Spurti has actually decreased both YOY and quarter-on-quarter. For 9-month FY25, CREDAC, that is Credit Access Grameen, ESAF SFB, Fusion Finance as well as Spandana Spurti have seen a decline in their AUM. Net interest margin of lenders with high microfinance exposures have dropped significantly or sharply year on year. Now, highest decline in net interest margin is seen for ESAF SFB, Fusion Finance as well as Spandana Spurti, while on a sequential basis, that is quarter on quarter, the highest decline is seen for Fusion Finance, Spandana Spurti and Suryodaya Small Finance Bank. Provisions have spiked up a lot for these lenders in the microfinance sector. Now, provisions as percentage of net interest income has increased for almost all the lenders. Provisions have risen on account of higher slippages. Quarterly annualized slippage ratio has jumped for all the lenders focused in the microfinance sector. Some of them have given double-digit quarterly annualized slippage ratio in Q3 FY25. Now, with recovery rate being on very low for the microfinance sector, elevated slippages would mean that there would be higher write-offs for these lenders. Hence, return ratios get impacted. So, return ratios have deteriorated for all the lenders over the past few quarters. Return on asset has fallen a sharply or steep decline seen for all the lenders focused in the microfinance sector. Lenders like Spandana Spurti, Fusion Finance have reported abysmal return on asset as well as return on equity. So from the date of our warning on the stress rising in the microfinance sector, the sector has seen massive underperformance to the benchmark index, that is Nifty. With respect to outlook, let's see what is this sector going ahead. Is that the net worth of some of the lenders have depleted significantly. This can restrain the AUM growth in the near term. Now, interest income of many lenders have declined sharply and this may continue in the near term. Hence, you can expect the net interest margin to remain under pressure in the near term for these lenders. Tighter net interest margin and higher credit costs will impact the return ratios. Loan recovery practice in Karnataka has seen restrictions by the state government. This can lead to further delay in repayment of overdues for the lenders, and that's why it can also impact certain key lenders in Q4 FY25. We also need to see whether the Karnataka issue has a spillover impact for other states or not. Now, Kotak Mahindra Bank recently said that pain in the microfinance sector may continue in Q1 FY26. So post the asset quality woes, the pickup in business momentum will come into focus. So an early end to the microfinance industry trouble looks unlikely.
Well, a very interesting piece out there from Abhishek. But moving on, it's now time for a short break. We'll get him on the markets on the other side. Welcome back to Trading Hour. Well, select life insurance stocks and also a few general insurance stocks are doing quite well in the session. Names like SBI Life, ICICI Prudential Life, and even ICICI Lombard. These are some of the stocks that are now trading near the day's highest points. SBI Life up over 3.5% in the session. But on the other hand, FMCG names, especially names like Britannia and Colgate-Palmolive, are the ones under pressure. Colgate-Palmolive down over 2% now near the day's lowest points. But in an exclusive conversation with CNBC, US Treasury Secretary Scott Bessent says he's not too worried about the recent market correction. Also talks about the 200% tariff imposition on the EU. Let's listen in.
I'm not concerned about a little bit of volatility over 3 weeks, because if you look over the long term, the reason stocks are a safe and great investment is because you're looking over the long term. If you start looking at micro horizons, stocks become very risky. So we are focused over the medium long term, and I can't tell you that the market is going to go up today, tomorrow, next week, but I can tell you that if we put proper policies in place, it's going to lay the groundwork for both real income gains and job gains and continued asset gains. I was with the Business Roundtable yesterday. I think it was 135 CEOs, and I talked to them about our plan, which includes tariffs, deregulation, and what I call reprivatizing the government, and bringing down this incredible level of government spending. And one or two items with one trading block, I'm not sure why that's a big deal for the market. Look, that's the nature of these reciprocal tariffs, that all President Trump is asking is for countries to take theirs off. So we have identified some strategic industries, the steel, aluminum, likely autos, but everything else is up for grabs, and that's going to be a decision that's made by our trading partners.
Well, earlier today, we also chatted with Ed Yardeni, president at Yardeni Research, to get his views on Trump's tariff policies and its effect on the U.S. Listen in.
The other problem is I'd like to see the market do better on a day when Trump is talking about tariffs. I've come to the conclusion that any day without Trump talking about tariffs is a good day for the markets. Well, I think a lot of us on Wall Street are disappointed with Scott Bessent. We thought he was one of us. We thought he was a market guy and that he understood that markets mattered. But now he's kind of dismissing us. He's not one of us anymore. And they're kind of like messing around with nitroglycerin. This is very, very dangerous to, basically tell people that the administration doesn't care very much if we have a recession, because the short-term pain is going to be for long-term gain. I hope he just doesn't remain bullheaded about his tariffs. He has bragged many times and called himself tariff man. And I think all of us on Wall Street, including myself, had the illusion, maybe delusion, that all Trump was really going to do was bluster. He was going to huff and was puff. And then once he threatened the tariffs, that there'd be negotiations to bring the tariffs down. Tariffs are bad news. And right now, it's interesting to see that foreign stock markets are outperforming the U.S. stock market, suggesting that at the end of the day, tariffs might be actually worse for the United States than for the rest of the world.
Well, that brings us to a close on Trading Hour. From the entire team, thank you for watching. Don't go anywhere. Halftime report is up next.